By the end of this video, you will have the exact news trading playbook, the 5-minute rule, the fade setup, and the continuation entry, so you profit from volatility instead of becoming its victim. Most videos on trading the news give you theory. This one gives you the exact if-then rules so you can execute from this today, entry, stop, and target included. Research on market reactions to Fed announcements shows that the initial 5-minute direction is reversed within 30 minutes over 40% of the time. Trading after the dust settles produces higher win rates than trading the initial spike. Here is what this looks like on a real chart right now. The news calendar for today has several high-impact events scheduled. Let me show you which ones have historically produced the biggest market reactions and how to position around them. Here is the problem costing most traders real money. The traders who try to predict news outcomes and trade before the release are gambling, not trading. The market has priced in the consensus expectation before any scheduled announcement. The actual move depends not on whether the news is good or bad, but on whether it is better or worse than what was already expected. This makes pre-news directional trading a coin flip at best. The professional approach is to wait for the news to release, let the initial reaction play out, and then trade the sustained directional move that follows. Here is the exact framework. 3 rules any chart starting today. Step 1. If there is a Fed decision, CPI report, or major earnings release today, reduce position size by 50% before the event. You cannot predict the number, you can control how much you risk on the reaction. Step 2. If a news event hits, do not trade the first 5-minute candle. Wait for it to close. The first candle is algorithmic noise. The second candle tells you the real direction. Step 3. If the second 5-minute candle continues in the direction of the initial move and holds above the event candle low, enter in that direction. Stop below the event candle low. Step 4. If price spikes up on positive news but closes the 30-minute candle below the prior close, that is a fade signal. The market rejected the news. Short the reversal with a stop above the spike high. Screenshot those rules right now. Those are your exact conditions before you touch any trade. Here are the exact rules. Write these down. Rule 1. Know the news calendar before the market opens. Fed decisions, CPI, and earnings move markets. Rule 2. Do not trade the initial spike. Wait for the first 5-minute candle to close after the news, then assess. Rule 3. Trade the reaction to the news, not the news itself. How the market responds tells you more than the headline. Rule 4. If the market moves against the expected direction on the news, that is a powerful signal. Trade the reversal. One of the most reliable patterns in news trading is buy the rumor, sell the news. When a positive catalyst has been anticipated for weeks, traders accumulate positions ahead of the event. When the event confirms, the anticipated buyers have already bought. There are no new buyers left. The stock immediately sells off because the only remaining participants are earlier buyers taking profits. The question is not what the news says. The question is who is left to buy after it is announced. Coming up, I will show you how today's top mover is reacting to its specific news catalyst and whether the setup favors continuation or reversal. Here is what the tape looks like right now. ExxonMobil is down 3.6% today, the biggest mover on the tape. This name is moving on news today. The key question is not what the news says, it is how the market is reacting. Is the move on high volume with continuation, or is it fading? That answer tells you whether to trade with it or against it. I am using today's live chart to show you exactly where these levels appear right now. The annotations are mapped to real price structure so you can see this in a live market, not just theory. The Federal Reserve announces no rate change, exactly as expected. SPY initially spikes up 0.8% in the first 30 seconds. Within 3 minutes, the spike completely reverses and SPY is back to flat. The failure to hold the initial spike is the short signal. Entry on the break below the pre-announcement level, stop above the spike high. SPY declines 1.2% over the next 90 minutes. Here is your complete checklist before you take any trade using this setup. News calendar for today is reviewed. Is there a high-impact event today? Fed, CPI earnings? First 5-minute candle after the news has closed. Market reaction direction is noted. Is the reaction what was expected, or a surprise reversal? Screenshot that. Before I give you the key takeaway, have you ever been caught on the wrong side of a major news event? Tell me what happened and what you learned in the comments. Here is your key takeaway. Write this down. Do not predict the news. Trade the market's reaction to it. The second move after the knee-jerk is the real trade. Pull up the economic calendar for this week right now. Mark every high-impact event. Commit to not holding positions through any of them until you have a specific plan. We cover major news events live in Discord with real-time reaction analysis. Come trade news-driven setups with our group. Link in the description. If you want the daily watch list delivered to you every morning, join us at patreon.com/c/ChartNavigators. Link is in the description. If this gave you one concrete edge today, hit like. It helps other traders find this. The full Chart Navigators series is in the description. Every video builds on the last. Watch them in order and you will have a complete trading framework in under 2 hours. Trade smart. Trade disciplined.